Well, for more on the story, let's speak with Jordan Anderson in London. He's a senior analyst at IHS Markit, focusing on Sub-Saharan Africa. Welcome to Money Talks, Jordan. Now, 20 million jobs across Africa could go. That's according to the African Union. That's a staggering number. Just which economies would be hardest hit, do you think?
So when we're thinking about the kinds of economies that are going to be most impacted by this economic fallout, there's really three important categories to think about. Firstly, the economies that are most dependent on trade with China. Secondly, economies that are most dependent on producing oil and trading oil with the rest of the world. Thirdly, economies with a significant reliance on foreign tourism. When we think about the first category, so countries that are trading with China to a great degree, now the upcoming Chinese economic slowdown is key here. At IHS Markit, we're forecasting Chinese GDP growth to slow to 3.9% in 2020. And when we think about the African countries most exposed to this, some of the countries that come to mind are Liberia and Sierra Leone, due to their dependence on iron ore exports. Also, countries such as Zambia, similarly reliant on copper exports. When we're thinking about disruption to the African manufacturing sectors, especially due to their reliance on China for imports and end markets, we're thinking more about countries like Cote d'Ivoire, Ethiopia, and South Africa. But in those countries, that's likely to have less of an impact on overall economic growth within the country. When it comes to the oil-producing economies, here we're thinking about, should we say, countries like Nigeria and Cameroon. Now, they're less exposed to China as a market for crude oil exports, but they're still highly vulnerable to the global price environment and obviously to decreased oil prices globally. When we think about a country like Angola, it's more exposed to the Chinese market, so we see that impact being concentrated. Thirdly, when we think about countries with a reliance or greater reliance on tourism, here we're especially thinking about countries such as Mauritius, the Seychelles, Cape Verde, the Gambia. Overall, though, IHS Markit assesses that Mozambique is the country that is most economically vulnerable to the COVID-19 outbreak. Just to insert a figure here, Mozambique's own Ministry of Finance has estimated it may need up to $700 million from external sources in order to meet certain funding shortfalls within the country.
Now, so the African Union, as we mentioned, has come up with this rather grim study, but is there any scope for the AU to perhaps come up with a coordinated response across the continent that might help shield the various economies of Africa from this outbreak, similar to what the EU has been doing?
Speed is going to be absolutely key for the African Union's response. Now, a couple of weeks ago, we saw finance ministers from across the continent get together for a virtual meeting, and they were able to agree. So finance ministers from throughout the African Union agreed in the virtual meeting to a number of key points and things to do going forwards. So, for example, there was an agreement to coordinate on responses when it comes to logistics. One of the potential hurdles for this, however, is the border closures that have been enacted between a number of African countries. For example, that we've seen within the East African community, we've also seen Ethiopia engaging in. Now, border closures are a vital tool in terms of stopping the spread of the virus, but this also poses a potential hurdle to that coordination on logistics that we were just talking about. Similarly, the African Union, the finance ministers in these countries agreed on the need to seek a US dollars 100 billion stimulus for the continent. And notably on the 27th of March, we saw an IMF meeting agreeing that they were going to increase the funding that's available for the Catastrophe Containment and Disaster Response Trust from $50 billion to $100 billion, and also to allow for a certain amount of debt relief within this context. That's going to be significant for what the African Union can do. Overall, IHS Markit, we're expecting to see the IMF significantly expand the support it's making available to low-income countries around mid-April. And that's going to be key, what we see the response on the continent being.
Okay, Jordan Anderson from IHS Markit in London, thank you again for your analysis.